Hey traders, in today's video we're going to talk about two common mistakes that many traders make. Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradeEmpower.com, and welcome to another one of my weekend review videos. If you are new, this is a weekly video that I put out providing you with some trading education, which will hopefully push you along that path of becoming a consistently profitable trader. If you are a returning subscriber, nearly 71,000 of you, I just want to take the time to say I appreciate your support. You guys have been doing an awesome job at liking, subscribing if you're new, sharing, and commenting under these videos. You guys may not know it, but each time you do one of those three things or all of those three things, it is a massive help to our YouTube page here. And I haven't told you guys this, but there's an in-house goal to reach 100,000 subscribers by the end of the year. I'm not sure why that's the number. As always, it sounded good, so we're shooting for it. It keeps me motivated. It keeps us inspired. So we're going to need your help to do it. So keep liking, keep subscribing, keep commenting, and keep sharing this video with fellow traders. In today's video, we're going to be talking about two common mistakes that many traders are making. And we're going to do so by taking a look back at a few trades that we took this week in our syndicate program. If you guys are not familiar with our syndicate program, there is a link underneath this video. Just click it. We still have the 30-day trial for $1. And if you just click the link, there's a video explaining all of that. But you definitely want to take advantage of it, at least for the first month. Invest $1 in yourself. Now, the first mistake we're going to talk about today is taking profits off too early. And we're going to start off by showing you a trade that I actually talked about in one of these videos way back at the end of June that finally came through earlier this week. It was a trade that took a while to set up. It was a trade that once we were involved took a while to complete. And it was a trade where those who were patient, those who were disciplined, well, they got paid for their patience, literally, with a few hundred pips. So we're going to start off by showing you the initial trade setup from our video a couple weeks ago. I'll show you the follow-up that I put out to our syndicate members this week, and we'll talk a little bit about the mistake that was made during that trade. We've seen some big moves in the market, and although, again, the recent reaction to it has been that the market is coiling, we know that coiling leads to an expansion. I don't know if that expansion is going to be up. I don't know if that expansion is going to be down, but I would expect some type of expansion in the market, potentially a breakout or something of that sort. And there are a few pairs on the 4-hour charts and the hourly charts, including here on the New Zealand dollar. I know the Euro dollar has one, Aussie dollar has one as well, where we're setting up some moves for advanced pattern formations. And if I click my new pattern assistant tool up here and draw it out, you're going to see our swing high right above, a little bit below 73 cent even. Our swing low to swing high, or swing high to swing low, I should say, is going to be our X to A. Our initial reaction from the Brexit vote is going to be our A to B. And then as the market coils down and down and down throughout this week, we've actually put in a C leg for a potential advanced bat formation, which would complete right up here around the 72.60 level. So again, I don't really start looking at these patterns seriously until we break past the B leg. But if price action were to expand up, the next shorting opportunity, for me at least, on the 4-hour time frame here on New Zealand dollar would be the completion of our advanced bat formation up at 72.60s. And again, and while we're at it, well done for you guys that caught this New Zealand dollar short. This is a trade that we talked about the week after Brexit. Put us through a little bit of pain. You can see we initially came up, we didn't get filled, and then the market reversed. Then we came up, we did get filled, and we spiked all the way past our entries. Then we came down, we got all excited. We're going to make profit, we're going to make profit. And then we came right back up, almost getting stopped out. Then we came down to break even, giving us a chance to scare ourselves out of the trade. Then we came back up and we said, oh man, I wish I would have got out of this trade because I could have got out for break even. But for those who were disciplined, for those who were patient, and held on. We achieved target ones and target twos, well over 200 pips of total profit on this trade. So pat yourself on the back, give yourself a high five, whatever you have to do. For you guys that were disciplined and stayed with it, for you guys that weren't and you exited the trade prematurely. Now, if you had a rule to trade the graceful exit, that's one thing. And that's something we talked about in our live room last week. That's one thing, because that means you followed your rules. But if you were someone that was supposed to see this trade out to its full potential, and you got scared, you got nervous, for whatever reason, you closed it out, you need to look at this and feel a little bit of shame. You need to take a picture of the chart and say, I left this many pips on the table because of my emotions. And I know it's not easy, guys. That's why we have support systems. That's why we have the live room. That's why Charles and myself work so closely with our transformation members. Psychology is a massive part of being a successful trader. And most of the time, we sabotage ourselves by picking the right opportunities. We pick the right trades. We follow everything in our plan to a T until we're actually in the trade. Once we get in the trade, then we find some way to scare ourselves out of it. We find some excuse to get out of it. And we end up in a position where we're like, oh man, I made the right call and I'm a good trader, but you didn't actually profit from it, which is a problem when your account slowly bleeds. So again, if you're someone that was involved in this trade and you got out and you weren't supposed to, I feel for you. I've spent a lot of my trading career doing that, but you need to accept a little bit of shame, and you need to put yourself in a position where you can get some support. And again, it doesn't have to be a training course or anything like that, but put yourself in a position where you're surrounded by like-minded individuals. Hop into a live room. Greystone has a London live room. I've got a New York live room. For you guys that are on Twitter, my Twitter handle is at Akil Stokes RTM. You can follow me over there. We have, a great group of traders that just hang out and share advice and pick each other up on Twitter each day. Small stuff like that helps in such a lonely industry. I'm telling you what, to be in a trade and just to be like, put a tweet out that says, hey guys, thinking about exiting New Zealand dollar, what should I do? And to have, 10, 20 Twitter followers respond, hey, don't do it, man. Stay tough. I'm in that trade too. I feel your pain. It could be that little thing that gives you the boost to stay in it. You never know. But find some type of support wherever it's at. If it's not me, find a friend, find someplace else. But you don't want to sabotage yourself and miss trading opportunities like this, because taking profits early is a common mistake that many traders are making. And as you can see from the video, it's sometimes a very tough emotional roller coaster. And that's one of the reasons I said, if you were someone that was involved in this trade and you did take your profits out early, take a picture of the chart, hang it up in front of you and use it as a reminder. This is what happens if I sabotage myself. I could have had this much. Instead, I got zero or maybe even lost some. And hopefully the next time you get that urge to make that mistake, you have that little reminder on your wall that will stop you from doing it. This is very similar to how I used to trade. I used to consistently take profits early. That was my thing. And then there was one trade. I was sitting in a live room, same pair, New Zealand dollar. There was one trade that I took alongside my mentor, Jason Stapleton. And because he was in it, I decided to hold and stay in it as well. And I remember him coming back and asking the class after the weekend, how many of you guys got out of the trade? And almost 75% of the class said that they exited early. There was only a handful of us that stuck in it. And for us that did, well, it ended up being about, I think, a 600 pip total winner. And I know for me, that was an eye-opening experience. It was the experience that I needed to say, hey, this is what happens if you stick to your rules. So having that support is what got me to that level, what allowed me to see it for myself. And that's why I encourage you guys to find some support out there. Again, whether it's a live trading room, whether it's the syndicate program, whether it's, Twitter, anywhere but a trading forum. Find that support and find some like-minded individuals that will help you push through those hard times and really trade up to your potential. Now, the second trade, this is going to be the exact opposite. One major mistake is taking targets early. The next common mistake is moving stops back. And this comes from a trade that I was sitting in all week. It was a dollar yen trade, which I entered. It did nothing. It stopped me out, and then it fell off a cliff in the direction that I predicted. So it was a tough trade, but there was a comment underneath the trade that we'll get to later that really caused me some concern for many of you guys out there. So again, I'll start off by showing you the recorded footage from our syndicate video where I'm walking you through the trade setup and my thought process behind it. Then we'll come back and I'll talk about the mistake that was mentioned, or not, the mistake that a trader mentioned, there we go, and how that can be detrimental to your trading account and your trading career. Now today I have a few trades on my radar. I don't know if I want to give them all to you because I don't want this thing to go too long. But I want to show you guys some interesting opportunities, and one starts here on the dollar yen. Now there's a few things here on the dollar yen. If we go out to, well, we'll stay on the 4-hour chart here. There's actually an advanced pattern formation here on the dollar yen. It's going to be a bat formation. Let's just give ourselves some real estate. There we go. And we're looking at something like this. We're looking at, let me just bring my Fibonacci retracement on from swing high to swing low. Here we go. We're looking at a bearish bat formation looking like this. X to A with our Brexit spike, X to A to B, B to C, and then a CD completion right up here at 105.88. Now, if you guys are on NinjaTrader, you'll also see a DSR, a dynamic resistance level, up in that area as well. Now, keep in mind, like many of the pairs recently, there have been some massive ATRs. So this bat formation has a big stop loss, and I'm talking, let's just say if you measure out your stop loss by using the 113 Fibonacci inversion. That's one of the techniques we teach for stop loss placement. You're looking at a stop loss at about 107.72. You're looking at an entry about 105.88. That's well over 100 pips of stop, or 100 pips of risk. Now, 100 pips is my personal threshold. Does not mean it should be a threshold for you, but I know for many of the traders that I work with, especially transformation members, it's somewhere around that area. So if this is not a trade that you can take because the risk is too high, you need to think about alternate ways to get involved. And this is when structure trading, for you guys that know CTS, this is where stuff like that comes in handy. And what we have here is essentially, again, we have a test of our previous structure highs. There's a DSR level right here. And we have a 26.18 trade that occurred. If you look at price action as we worked our way up, we consolidated right here. We then spiked up, hitting our DSR level, spiked down. We retested that zone, right? Creating our double top right here. We then broke and closed below it, and finally we're retesting it again right now, offering a 26.18 opportunity. And we know with 26.18 trades, we can set much shorter stops. They don't need to be this far up. Now, for me personally, I am involved in this trade. I haven't typed it into the chat yet. I will do that. Sometimes I forget, guys. I'm sorry. It's not, no offense, but it's not my first priority. First priority is for me to handle my personal trading. But typical 26.18 stops are going to be about 10 or 20 pips above the highs here, which would be, if our highs are at 106.31, you're looking at about 106.50s. Now, in my opinion, again, I'm not a 26.18 trader per se. I use the technique, but I don't trade it as a strategy, meaning I don't take every single one of them. So I'm not following that strict rule on stop loss. I'm going to get mines above previous structure because I'm shooting for the bigger move here. So my stop loss is above previous structure highs, above that 107 even handle, giving myself more risk. There's a lot of risk on this trade. I've got almost exactly 100 pips of risk on this trade, but I do want to respect structure. I don't want to be stopped out right here while we're still at structure, while we're still on our DSR level, and still have price action reverse and prove to be right, but not be able to benefit for it. So a big risk on this trade. But I do think it's worth it to get some type of retracement. For you guys that use the RSI, if you pay attention as well, for you price action traders now, let's just delete this. And if you guys are new, again, if this is a lot for you, just sit back. Don't worry about trying to trade this. Just trying to focus on the process that I'm doing. And the main process for this trade is that we've got a retest of structure here. The rest of the stuff you learn with time, or you learn through investing in some type of education. But if you look at the RSI here, well, if you look at price action, we've got price action making what? Higher highs, higher highs, higher highs, right? We're sloping upwards. However, if we look at the RSI, what is the RSI doing? We went oversold back here on July 12th last week, and we've been putting in lower highs the entire time. So we're showing some bearish divergence on the RSI. That's a sign that momentum is slowing down. We may see a reversal, keyword may. But when you add that together with the other analysis we just talked about, especially being at a structure level, it makes for a pretty decent opportunity. So I'll be looking for a move right back down into structure, a retest of our structure lows right here at 104.03. So this is going to be a big trade. I will be actively actively trailing my stop on the way. The main goal is to reduce that 100 pips of stop. But target ones will be right here about around 104 flat. For target twos, we're looking at a retest of structure down here, but we don't trade, or not down there, down, where's it at? 101s, yeah, down at 101s. But we don't trade second targets here in the syndicate, so you guys don't need to worry about that. So that's dollar yen. Probably started with the most confusing one, but let's move on to dollar Canada. So we're looking here at the dollar yen trade. Let me go ahead and delete this and clean my chart up a little bit. I just want to show you how the trade reacted. Again, I entered about 106, I think it was about 106.15s, 106.20s, looking for a move. Oh, let's get it right back up there. There we go. Looking for a move back down in the previous structure for my initial targets. My initial stops are right above structure looking left, about 107.15s. And as you can see, I was barely stopped out before the market started to roll over back to break even. You can also notice that I have a very good risk reward. Now, this was a trade that I did post on TradingView. So if you guys aren't following me on TradingView, just go over there and search Akil underscore Stokes, and you can check me out. But underneath this post, there was a lot of discussion about this trade, a lot of positive discussion. And after the trade got stopped out, there was one comment that really caught my attention. I'm going to bring it up on the screen for you, and it said this. Give me a second. You guys can't see it because I want to black out the name, but it said, Akil, initially I had my stop loss at 107.22, but as price moved up, I decided to adjust it to 107.90s to avoid the stoppage. I don't usually do this. Again, I don't usually do this since I prefer to stick to my plan. Big red flag right there. I don't usually do this since I prefer to stick to my plan. But I only adjusted it because I could fit in more risk accordingly to my trading plan. And this is the second common mistake that a lot of traders make. The first one, again, is taking profits too early. The second one is going to be moving your stop loss back. So, one thing I believe is that you should know your targets and stops. Targets can sometimes be adjusted, but especially your stop loss. Your stop loss should be set before you ever take the trade. You want to define your risk before ever being involved in the market. After all, if you don't define your risk before getting involved, how do you know if it fits within your risk profile? So your stop loss should not be stopped or should not be moved, in my opinion, unless you're trailing it down with structure, meaning you're locking in either less risk or you're locking in guaranteed profit. And what this trader did was they had an initial stop that was about right here, and they moved it all the way up to this level in order to avoid being stopped out. Now, the thing is, obviously in this scenario, it has worked so far. I don't know where the targets are at or if the trader is going to make money off of this, but initially it worked so far because the trader avoided being stopped out with their original stop loss. The problem is, what if price action doesn't continue down? This looks really, really, really good if price action does this. Because then you're sitting there, oh yes, I moved my stops, I avoided the stop hunters, and I made some profit on the way down. But this move isn't guaranteed to happen, right? What if instead of the market doing this, the market puts a little retracement in here and continues up? Or what if it never retraced in the first place and only continued up? Well, now you essentially almost doubled your initial risk, right? By doubling your stop loss. And what that does is it sabotages your risk reward. Charles had an excellent video on Sunday's Forex Market Preview about how to tell if your system is profitable. We talked about the expectancy model. And by doing that, you understand your average risk, you understand your average profit, and you put that into a nice, simple formula to understand if it makes money or not. Well, it's great when you have a system that makes money, right? But if you're consistently sabotaging it like this, you're not really following those rules to the expectancy. And the key is if you're gonna add more risk on average to your trade, you're gonna have to win more in order to find that same level of profitability. And I'll tell you what, most strategies don't win that much more. We had a discussion about it. In our live trading room today, where we talked about different strategies, and typically strategies have their common expectancy. If you're trading, say, advanced pattern formations, they're going to win about the same percentage of the time every time, right? If you're trading, whatever strategy you have, you kind of know the historical expectancy of that strategy. So live results, I should say this, there's only going to be so much that you can do to deviate. You're not going to take a system that wins 60% of the time, and you're not going to just make a few changes and cause it to win 80% of the time. That's just not going to happen. Maybe you can turn 60 into 65, but the majority of the time, you're not going to find more winning trades. The way you make money in this industry is by doing two things: either reducing your risk, so it's kind of an addition by subtraction. You make more money by losing less whenever you lose, or increasing your targets, finding your maximum favorable excursion. How far can I push targets before it comes too greedy? And even when you do that, it's not going to up your win percentage. It's just going to up your pippage. So you got to be very careful about making the mistake that I just showed you, because it's great when it works. But when it doesn't work, you're taking massive hits, massive unexpected hits to your account, which you may not be able to come back from. And that's... that can be very devastating. I can go on for a long time about mistakes. If you haven't seen it already, guys, underneath this video, if you're on the Trade and Power YouTube page, there's a playlist called named Akil Stokes. There should be a video in there that's black and yellow called Statistics on Why Most Traders Fail. It's on our Trade Empowered website as well. Watch that video, and it'll give you a great idea of really how the main... I don't even know how to say this. It'll give you a good idea and show you why most traders fail. And it's not that they can't find good trading opportunities. It's self-sabotaging yourself, like in the two examples I just showed you. So hope you guys enjoyed this. I have a rant from our live room that I want to share with you. It's more of a motivational speech instead of a rant. I'll put that at the very end. But before you guys leave, again, do me a favor. Like this video. Hit that subscribe button if you're new. Share it and leave me a comment underneath. Let me know, have you ever made any of these two mistakes? Have you ever taken targets early, felt really, really good about it, only to see the market hit what would be your initial targets, and then felt bad because you missed the bigger piece of the pie? If you've done that, just give me a simple yes, I've done that down below. Or if you've made the second error I talked about moving your stops back, and then getting burnt, type that below as well. I want you guys to see that you're not alone. Many traders, it's because most people don't trade, but many traders think we're on an island. It's just me. I'm the only one doing this. And the more people that we can show that, hey, you're not alone. Many traders are making this mistake. Many traders are in the same boat as you. It just gives a little bit of a boost to your morale that, hey, I'm not alone. There are others like me. I do have a chance to overcome those flaws and become consistently profitable if I take the right action to do so. And again, plenty of ways you can take the right action. And I'll be the first to comment underneath there. So do that for me. Like, subscribe, share, leave a comment if you've done any of these two mistakes. And I'll see you guys next week. Until then, plan your trade your plan. You guys have a great weekend. Sunday, Charles will be back with another Forex market preview. Jason Greystone will be back next week with another London live room video. We've been flooding this channel with awesome content. So just make sure that you're continuously checking this and not missing anything. Take care, guys. If you sign up for the 12-week transformation course, you are not guaranteed to come out a consistently profitable trader. Now, I can promise to coach you to the best of my ability. I can promise that we'll give you the information needed, right? The tools needed to become a consistently profitable trader. But whether you do it or not is up to you. It's up to the person completely. And some people attack it with the mentality that I have to be good, I have to make it. Other people don't. And again, I've spoken to people where they've signed up a week ago And they're already asking me questions about CTS. Like, hey, I just entered this CTS trade. What should I do now? And I'm like, well, didn't you just sign up yesterday? He's like, yeah, but I went through 5 weeks in the first day. Well, didn't we just talk about taking your time and not live trading until you get to this level or this point? Yeah, but I just had to do it. You know how it is. Yeah, I know how it is. You're gonna fail. Now, I don't tell them that. I try to encourage them the best that I can of, hey, you may want to take a step back, but people are going to do what they want. So it's always a choice, and that goes for anyone, whether you're in a training course or not. It's not even about taking a training course. It's a choice you make on how much are you going to dedicate yourself to becoming a good trader. Are you going to do what needs to be done? Are you going to take time away from watching that TV show, right? Spending 2 hours watching that TV show at night and go hit some charts, right? Are you going to stay in on a Friday night, not go out and party and start working on your trading plan? Right? When you're taking a trip, this is one thing I started doing. When you're taking a trip, are you going to pop in an audio book on trading psychology versus listening to the new album that came out? It's a lifestyle, guys. It's dedication of a lifestyle. It's not a, you press a button and it happens. It's a change in your lifestyle. I'd say it to my track athletes. If you want to be a great track athlete, it's not about just coming to practice every day and doing the workouts that I give you. It's about changing your lifestyle. It's about getting enough sleep. It's about doing the right things, not going out and binge drinking, right? Proper nutrition, stretching after practice, getting in the cold tub, getting your ultrasound, right? Getting your stem, taking care of your body. Think about professional athletes. It's a lifestyle. And if you're not dedicated to that lifestyle, you're not going to make it. You're not going to make it. There are tons of things I wish I can do. There are tons of things. And every day I wake up and I say, you know what? I've made it, Akil. I've come from someone that stunk, someone that's been able to gain a lot of money and build a life out of trading, right? A life for me and my family. I should take this time to do whatever I want, because that's what becoming an entrepreneur is, right? Freedom of time. I can do whatever I want whenever I want. And that's true. But the question is that going to continue to push me in the right direction? If I skip my analysis tonight and go out and play golf, is that going to push me in the right direction? No. And I don't want to go back. So I'm scared to death of going back to where I was before trading. That's the scariest thing for me. I do not want to go back to where I was before trading. And that fear pushes me each and every day. That fear pushes me to get in front of the charts and do what I need to do. And that's called dedicating your life to it. And for those who do that, they win. They win. For those who don't, they lose, or they stay someplace in the middle. But you got to take it seriously.